So what are some macro event risks we need to be on the radar for, besides, of course, jobless claims and NFP? And we're still not at my 267,000, or 4%, respectively, which will trigger volatility when and if we get there. What are some other, market movers? CPI, what about it?
This short clip is presented by Edge. Edge is our pro-to-pro advisory service, which is all about the macro with a focus on one-to-one engagement with the hedge fund manager, Craig Shapiro, and direct access to LaDuc Trading founder, Samantha LaDuc. For more information about Edge, visit www.laductrading.com/edge.
Yeah, I'm just pulling a calendar, but look, this week still data, payrolls on Friday, and ISM services, very important. Next week, not as important, right? We're going to start to be transitioning away from, macro data, but we do have next Friday is the UMich, inflation expectations survey again. So that'll be something to watch. And then on the 14th of November is the CPI, which again will be important, right? I mean, those, every month it's CPI, it's payrolls. We gotta watch them. And then with respect to the Fed, we're going to get a ton of Fed speak, right? Unfortunately, that game is back. Starts on Friday. Barr, Kashkari, and Bostic are speaking, and then next week we hear for the first time the new Fed of Schmid is speaking, Logan speaking, Bostic, and then Powell actually, I'm just noticing now, is speaking on the 9th. He's speaking at a panel at the IMF on monetary policy challenges, right? So he has the opportunity to next week now address the market's reaction to what the Fed did, as well as payroll print. And so if he didn't like what he saw, because perhaps the market was too dovish or whatever, he could use that as his opportunity to move the rate hike odds of December. We don't, we'll have to see. We'll have to wait until Friday to see if that's something that might. But again, if there's a hot payroll print on Friday, that could be a lead up for him next week to try to push back a little bit again. This initial dovish reaction.
And we get another payroll print before the next FOMC on the 14th.
That's true. Yes.
Okay, so we'll see what happens.
The next Fed meeting is on 13th.
13th.
And I think we're only going to get one inflation print and one CPI print. Just scroll. Yeah. So,
But two NFP prints.
Two NFPs. Okay. Nope, I'm wrong. The CPI comes out on the 12th. So we will get two NFPs, two CPIs before the next Fed meeting. So look, the year's not over yet, but from a flows perspective, the Santa Claus rally and the dynamics behind that, which we've talked about before, that, there's only going to be certain times when the macro is going to be strong enough to overwhelm that. And we're about to run out of time for macro to overwhelm flows here by the end of this week into early part of next week. And then that'll kick off again after November expiry. But the buybacks into the December expiry are very sizable because you get quarterly option.
They're quarterly as far as the seasonality, but they're actually falling. So there are fewer buybacks coming in, but most of the buybacks, the bulk of them are in this quarter for the year.
But the interest, and I'm looking, it's December 15th. It's an early expiry for the year end this year, because you literally have two, that's the earliest we can have a December expiry is December 15th, and then we have 2 more weeks of trading after that. So it could be in one of those weird situations where we have the Fed and expiry kind of on that same week, and then the window of weakness opens again after the Fed, and we sell off into the last 2 weeks of the year like we did in 2018 or so. I wouldn't make grand generalizations about Santa Claus rally or seasonality, or that we have to rally into year end, because I think we just got to take these things a month, 2 weeks at a time, and try to identify again this dynamic of macro versus flows, what's going on and what's more important at a particular point in time.
Plus also, we don't just make a low, we test it, we retest it, we make sure it holds. So there's a lot more back and fill that takes place unless we have an event, right? So even with flows and macro, I'm just saying as it relates to parsing out this 4,100, it's not the 4,000 I am still expecting. The point is we still don't have confirmation that is the low for the year. And it may be, it may not be, but I don't have any confirmation of that. We typically will only bottom if there's an event. It's not just a level. So there is nothing from that 4,100 tag that was event driven. It was just an incredibly strong technical point of bounce, perfectly aligned with a VIX crush, right? Monday, Tuesday into FOMC. So those are the flows. Those are the flows that have definitely helped.
It's so, I've been doing this for a long time, but sometimes it's just it's hard to accept that there was nothing, quote, fundamental market's reaction, and that the only thing that mattered was the flows and the selling of volatility, and that really Powell didn't say anything particularly dovish today. It's just that when he said it and the time decay, and that is often more important than anything else, and that tomorrow we can wake up and we have a completely different reaction, and you're like, well, what was yesterday? And so I don't want to, but that as a trader sometimes makes it difficult as well, because you want to stick with your position, conviction, quote, wrong. And tomorrow we could walk in and we could just be up in our 100 handles, and then I have to say, yeah, definitely, I'm wrong. So,
but at the same time, underneath the surface, there still was no net buying, and there was still falling breadth. Yeah. So it's one of those deals where it is short duration burst of energy that typically gets unwound soon after. I wouldn't be surprised if we roll right back over by Friday.
The full episode is available to all Edge paid subscribers. Visit www.laductrading.com/edge for more information.